Poland's central bank cut its benchmark interest rate to a record low last week by 0.25 percentage points to 3% as economic growth and inflation continue to decline. Joining me on the line is Timothy Ash, Head of EM Research at Standard Chartered Bank. Timothy, is this a good move, and do you think it will give the Polish economy the boost it needs?
Well, I think certainly the central bank will following other central banks in the region. You know, at least Poland has scope to reduce rates. The problem, I think, in Poland is the interest rate transmission mechanism is quite weak. One of the problems is that Polish corporates are sitting on cash. I mean, their cash balances are quite high. The problem is not really the availability or the price of credit. The problem is the generally weak business environment and lack of confidence more generally, both in Poland and the European economy. That's the problem. And
consumer price inflation has slowed below the bank's target range. What knock-on effect could this have on the economy?
Well, I mean, you know, like everywhere else, you've got very deflationary, depressed environment. So low inflation, you know, is a reflection of the weak economy more generally. That's a challenge for the authorities, both in Poland and elsewhere in the region.
The Polish economy slowed sharply in the fourth quarter, with growth dropping to a small 0.7% per year. What are your forecasts for growth in upcoming quarters?
Well, I think the expectation is for the rest of the year growth is going to remain very weak. I think full-year growth is probably not going to be significantly above 1% for the whole year. Maybe into next year we could see growth re-accelerating maybe to perhaps 1.5%, 2%, probably 2%. But I don't think anyone assumes that we're going to see a quick rebound in growth.
And inflation has eased to 1%, which is below the central bank's target of 2.5%. Do you think the central bank can reach its target inflation in the near future?
I think it's kind of beyond its control. I mean, as I mentioned, the domestic demand in the economy is very weak. Obviously, commodity prices have been softer in the last 6 months or so, and again, that's helped drive inflation lower. The central bank has been trying to cut policy rates to try and stimulate growth and demand, but you know that's very difficult again against the backdrop of very weak confidence more generally in the economy and the European economy. So, I mean, I don't expect inflation to push back quickly, even to the bottom end of the central bank's target range. And I think, you know, it's going to be 2 to 3 years possibly before we see inflation moving, you know, to the middle or even threatening, you know, the top end of the band. We're a long way from that. So, I mean, inflation looks very, very subdued at the moment.
That's all for now, but do check out the first Targets in Focus of the new trading week with my colleague Monica Gibson. Goodbye for now.